Hey everybody, this is Dave Hawks, and it's the update of our FlexWeight portfolio. So what you can see in front of you right here is the different rankings that we have, and I'll go through quickly with what it is. It's October 29th, so this is interesting timing just because, as I'll show you, and I'm going to cut back to our graphics page as well so you can kind of see where we are. Our overall weighting is generally, we're pretty much out of equities, and it's kind of interesting because I'm curious over the next sort of 6 to 8 weeks where this will look. I don't where this will lead us. I don't think there's a big issue with this. I think that possibly we might be early, but we'll have to wait and see. So in the case of the rankings, the trend rank on the S&P 500 is 3.8. As you can see on our scale right here, that is the very low end of trading. So basically, when you have a 3.8, and we don't call it a hold, we call it trading because basically when your ranking is that low, you if there's an opportunity for you to get out of something, the probabilities are pretty good that particular security is, in this case, the S&P or the Spider, is likely going to have some additional downside, and it may not be a huge amount of downside, but basically the risk of being out of the market at this point is really low. So the other ranking that we look at, or in our data, we is the 1 to 3 month ranking. You can see on a scale of 10, this is 0. So basically, we've had this exceptionally strong move in the marketplace at this point. So, given the fact that where the market has come from, and on a timing perspective, we expect that there's not a lot of risk in necessarily being out of the market, even if the market continues to sort of drive a few points higher, much stronger than I thought it was. I mean, we're probably almost 3 points above where we did our ratings, and I have a 6 to 9 month ranking in here, and I'm not on the spiders, so we can talk a little bit about it, but it doesn't really play in a great deal into the overall ranking for the FlexWeight model portfolio, because the FlexWeight is portfolio is really something that's geared towards being uh, a more tactical oriented portfolio. So the overall composite rank that we have on the market, and this is sort of what comes into play, is our 4.4. Again, it's kind of midway, not even quite so, midway through the point of trading, and on a scale of 0 to 10. And so that tells me that at the very best, the market right now is a trading market. That the last time that we saw a level this low on the market, we had to go back many years, and the ranking of this is caused by the big shock that we had from the negativity. So whether or not that holds true, our viewpoint right now is that we will be substantially underinvested. So that is it. The probability data that we could probably get to in another video suggests that there's not a lot of risk of being out of the market in terms of lost profit, because that's where the trend ranking comes in. But 4.4 is generally one of the lower readings that we've actually seen in quite a long time on the S&P. I believe we have to go back to 2011 to sort of see a composite rank at this particular point in the market. So now in terms of the FlexWeight portfolio, as you can see, the FlexWeight portfolio only carries the short-term ranking and the trend rank. And we double weight, at this point, we're double weighting timing versus trend. There will come a point where trend will become more significant in the portfolio. But basically, in terms of our overall ranking, what we can see is that we have a 0 rank, obviously, in the timing. We have a trend rank in here, and then so our overall weighting rank, it's actually, we don't really use it as a composite rank, but basically at this point, we have a viewpoint on the market that shows that we have a 13% portfolio weight. So we have a very small amount of position that exists in the equity market, and it'll be interesting to see over the next few months if we can sort of get an opportunity to get that back. But basically, the long and short of it is that we are basically negative on the market over the next 6 to 8 weeks. If we have a portfolio, and the shift on the portfolio actually would have occurred a few days ago at this level. So if you were tracking portfolio, you want to have something invested in the market. You'd still have a 13% long weight at this particular point. And it's interesting because the portfolio, the last major shift on the portfolio came sort of after the bottom of the market, the timing weight, but it still wasn't a particularly great shift. So we didn't actually capture a whole ton of money on the way up, and now we're substantially reduced. Now I'm going to show you um, the bigger picture and why. So generally, the reason why we overweight the timing side of the portfolio is pretty straightforward. As I mentioned before in our videos on D2 modeling, whenever we see the equity curve of the trading system above the profit curve or the dividing line, it's usually the point where we want to make sure that we overemphasize the profit, pardon me, the trading system and the timing aspects of the portfolio, because as can be clearly seen from here, you've had very limited movement, from 180 to 200. So you've had a 20-point move on a 180, which is somewhere around 10% going back the last couple of years. But basically, if you take a look at this, you've gone from 80 to 140, so you've almost had a 90% move in your profit by being more tactically oriented. So this is the point where we got the trading system signal to go short. Now, the only thing that I'm kind of curious about at this particular point is as we can see right here, we're starting to come through this cyan colored line that I'm just going to click on right here. And generally, when we start coming through the cyan colored line after we've seen something work, it could be a sign of things that are going to work out. Generally, what happens, pardon me, it could be a sign that we might be rotating over into a market that's going to be either, and again, the weakness in the product is that major negative markets, or when the market is an upward market and it starts to go into this sort of smooth environment. And that is kind of the risk potentially that we possibly will see. And our rankings at some point will begin to shift around. But as I said before, I think at this particular point, this trigger occurred here. We haven't seen any major rotation over. As I said before, the last time we've gone back to this was actually, pardon me, was back in 2012. It wasn't even at this particular level, and there was a bit of a start of an uptick. So at this point, just as an update on the market, I am basically flat. The algo is short on this particular point. We don't really sort of term it in terms of algorithmic ideas, and we don't put our algos together so that they show us anything on the short side. The short trades have been showing some value. My guess is that especially since this algo is just an upward sloping algo over the next few weeks, my guess is that we should see at least some movement down. We're 208 on the spider, coming up with a similar value on the SSO. So I'll put this up so you can see. So this curve is the SSO. You can see again the SSO. So the equity curve really mirrors the SSO. In fact, it seems to have even a more poignant idea. We've gone from 34, so we've made 50 points on basically nothing on this particular trading system since it's crossed. And so as we get down through in here, I'm kind of curious to see what's going to happen if we're going to continue to the upside. But as I said, at this particular point, I don't think that there's a tremendous amount of risk of being, sort of out of the market, and we may in fact miss a little bit of upside towards the end of the year. But I'll be looking for that opportunity for us to jump back into the system on some sort of weakness. So just to recap, go through it again with you guys. The position in the market we have is we only have a cash weighting of 13%, which is the current portfolio weight. In fact, what we have in the market in terms of when we made our shift was roughly around 13-14%. So there hasn't been a great deal of change in the portfolio weight, and I would look to see probably it's going to be a while before we see any significant change on the long side of the portfolio. We would really need to see sort of a break towards the old highs, and then a drop back with that. But at this particular point, we would expect that there's opportunity on the short side, given our timing idea. It's not reflected in our portfolio because this particular portfolio doesn't go short. But anyway, it's worth keeping in mind. I wouldn't necessarily get in front of the runaway train because there is some popular some very positive data. The last thing I did want to cover quickly, and I'll go through it, is I just wanted to touch base on something. We have a proprietary tool called the Trend Value Indicator, and the Trend Value Indicator is really a great tool that kind of tells us, when what the peak strength is in the probability. And when I was doing this institutionally, we used to call this probability of absolute gain, and we used to drive a lot of that information from trend value. As you can clearly see right here, the trend value is the thicker of the two lines. What we're really interested is in peaks. I just kind of want to equate this back to sort of the fall of last year, because in 2014, when we had the big sell-off in October and the big rally, you did see considerable peaks and troughs, but this particular rally is sort of bumping up on peaks. And generally, the trend value is what it tends to measure that you get an overall rating based on the success of your trend, based on how much it moves up and down within sort of a defined pattern. So very, very smooth movements indicates real positive upside or positive growth, which usually leads to, and readings over this blue line here usually suggest that you've got, substantial, not substantial, but you have further upside coming in the next week to 2 weeks. And back in 2000 and the fall of 2010, we actually did see quite a bit of that. We did see periods where the trend value was hitting those levels, and even though there was some selling, the market continued to sort of work its way back up to new highs. So at this particular point, I'm not sure exactly the implications are in terms of the longer term, but basically this is telling me on the short term is that you are losing some upward momentum, and in fact there is selling into this. It's hard to believe given how stupid some of these rallies have been, but there is some momentum that's coming up. So bottom line, lighten up your equity positions at this point, and we'll update when we think there's some opportunity to get back in.